accounting boffins. Yes, we are busy with cost accounting. You are with Ashraf Patel and my team. Remember, it's all about team effort, so we're making sure that you understand the section on cost accounting. Right, quick recap. You know, we always do that. Remember, it is imperative, it is absolutely crucial for a business to do what? To work out the costing accurately. Why? Because if they do that correctly, they can arrive at the correct cost price and therefore the correct selling price as well. Right? Important. Then, when we're doing this costing, what will our focus areas be? What will we concentrate on? We will concentrate on one, the differences between a trading enterprise is what you've been doing up to now. Remember, you've now also done a manufacturing enterprise. Here, when you're dealing with a trading concern, you have your cost of sales and the value of your inventory obviously is given to you. Whereas in a manufacturing enterprise, in a manufacturing setup, you have to calculate your costing, and that is important. And therefore, you will find that the cost of sales is derived in a manufacturing enterprise. This one here will actually be calculated by us. We will determine our costing. And you've seen that when we worked on the finished goods stock account. Okay. Again, what are the three components that go into the manufacturing concern in terms of the costing of a product? It will, one, be your costs will be your materials, right? The materials that we use to make the product. Number two, your labor. That means the actual people employed in the manufacturing line, in the production line, those people making the actual product. And the third component, yes, obviously, would be those costs that cannot be specifically identified to a particular product. However, they fall within the ambit of the factory. And therefore, it's regarded as your factory overheads cost account. Okay, just a quick one. The moment you see the word factory being assigned to a particular cost, you should immediately know that that will be your factory overhead. Okay. Again, like I said, factory overheads, a bit of explanation on it, are those costs which are associated with the manufacturing process but cannot be directly identified. Example, factory rent. Obviously, dealing with the manufacturing process, but not directly, so we apportion that to the product in terms of the factory overheads. Okay, and obviously we said this is a cost account. Again, let's look at our concept here. We said materials, labor, factory overheads. All of these will then give you your production cost. Right, so of the 5 cost accounts, namely material, labor, and factory overheads, those are assigned to the product, and the other 2 cost accounts, namely your selling and distribution and your admin cost, are related to your net profit. Okay. Look at the flow of information. And this here is imperative. It's important that you understand what we mean by the flow of information. You have information moving from your stock account to your cost account, and from your cost account into your work in process or work in progress. Right? I also said that the work in process account or the work in progress account is sometimes referred to as the manufacturing account. It's the account where it's the boiling pot of all your manufacturing costs. So that's where you bring them into. Remember, the opening balance in your work in process at the beginning of the year goods in a semi-state of manufacture, bring in the direct material, plus the direct labor, plus the factory overheads, right? Then you look at your closing balance, and then you determine your cost of production, which is the actual cost of making that particular product. Great stuff. I understand that. Good. Okay. Now we have information where we are told that you are given information. Look at the nature of this question. Different to what we've done in previous lessons. Here you are given information and you are expected to answer certain questions based on that information. Okay, the information tells you that the business produced and sold 5,000 flags during the year, right? What's the information that we have on hand? Obviously, these are our calculations. We are expected to work out the selling price per flag, the costs of production per flag, the gross profit per flag, net profit, and the markup that was achieved. So that's what's expected of us. From what information? Let's look at the information that we have. Okay, this was another part of the question. We have to compare the direct material cost for 2 years. Okay, those are just the questions, and we have also to calculate and comment on the break-even point for this business. So once again, you can see, well, by looking at the questions, it tells you exactly, this is the information that's provided, these are the questions that I have to answer. Okay, what do we have here? We are given a work-in-progress account. Unlike previous activities, where you had to calculate the work in progress, you are given the work in progress. In other words, you are told, that's my direct material, that's my direct labor, there's my factory overheads, there's my finished goods. What do you notice peculiar about this question on work in progress? Notice, in this particular set of information, there's no opening balance and no closing balance in work in process. Now obviously that's given for a reason and dependent on the types of question that you have to answer. You may come across a situation where you're told there is no work in process at the beginning of the year and no work in process at the end of the year. But understand that's relative to the question that you are answering. Right, so in this case here, you have your material, you have your labor, and you have your factory overheads. You also have your finished goods in terms of the total goods that were manufactured this year. Let's go through each one of them so we understand where they're coming from. Direct material, this one here, is the value of all the materials that were used in the production of our flags. Number 2, the direct labor, again, all the labor that was used in the production of my flags. Let's look at the flow of the labor. You paid salaries and wages, right? Of the salaries and wages, some of it was relative to the factory, direct labor. Some of it was relative to the factory, but indirectly, indirect labor. And third one, or the other cost component could have been gone to selling and distribution or the admin section. So what have you done? You've taken your salaries and wages, the external account. You've apportioned it to your cost accounts, where direct labor, factory overheads, selling and distribution, and admin cost. So your salaries and wages account actually closes, right? It ceases to exist. And you've now transferred it to the relevant cost component, and the 4 possible cost components would be direct labor, factory overheads, admin cost, selling and distribution. Right, that's just information. Okay, then you have your factory overheads, and once again, in your factory overheads, guys, remember all the costs relative to the factory are brought into your factory overheads. Like I said earlier on, a giveaway is the moment you're looking at a particular expense and you see the word factory alongside it, you must know for sure that that component or that expense has to be allocated to the factory. Okay, so we've dealt with that. Remember, in your finished goods, there's your opening balance given to you. There's the amount transferred from your work in process, right? There's your balance at the end of the year. And clearly you can see this becomes your cost of sales, like we've mentioned earlier. When you are doing the books of a manufacturing concern, your cost of sales is derived, it's calculated in your finished goods stock account. So you're going to debit your cost of sales account and credit your finished goods. There you can see it, clearly indicating to you that it's a figure that you work out, that you derive in your calculations. Okay. So you then have your trading account. And what is it that goes into your trading account? Remember, it's your sales and your cost of sales. Now remember, your sales figure obviously is the value of the goods that you have sold. Your cost of sales is transferred from your cost of sales account into your trading account. So your two trading accounts are what? Sales and cost of sales. They deal with trading, right? And in the trading account, you calculate your GP. So in other words, this is your gross profit. You can actually put it in brackets. There's no harm in doing that. But the detail, the correct contra detail, is certainly trading account, which you're transferring to your profit and loss. So obviously, this detail here will be profit and loss, where you're transferring that into your profit and loss. But like I said, you can put in there gross profit to make so that you understand it, just for understanding purposes. But the correct entry is actually profit and loss. And then in your profit and loss account, as you can see, you transfer your profit, your gross profit that is, from your trading account. You can see here, watch, you are debiting the trading account with 276,250, and you are crediting your profit and loss account with 276,250. You're transferring the profit, the gross profit, from your trading account into your profit and loss account. Okay, once you've done that, you now bring in your two cost components that were not dealt with during production. Why? They were not production expenses. What were they? They were your admin cost and your selling and distribution cost. Watch, there's your admin cost that you bring in, 68,000 Rand. You then bring in your selling and distribution cost, which was 77,000 Rand. And clearly now you can see from your gross profit, you subtract the 68,000 for admin, 77,000 for selling and distribution, to give you a figure of 131,250 as your net profit. Remember, you're transferring that profit into the capital account. Therefore, your contra account is capital. You can put in net profit like we've done here for you, just to give you an indication that that was your net profit for the year. Okay, so in this particular question that we are dealing with, you are not expected to draw up these accounts. Notice, slightly different. You are given the accounts and you are expected to answer questions that follow. Now, certainly, you want to know the answers to those questions, don't you? So, the place to be with Ashraf Patel and the crew. We'll see you just after the break. Welcome back, accounting boffins. Yes, you with Ashraf Patel and the crew. What we're going to do is we're going to take you off on a flight to make sure you reach heights in accounting, where you will be then able to answer any questions on cost accounting. Ready for takeoff? Here we go. Okay, what are we going to do now? We're going to calculate from the given information the selling price per flag. Let's get our pen there. Okay, and let's go. Here we are. We're calculating our selling price per flag, right? Our cost of production per flag, our gross profit per flag, net profit per flag, and the markup percentage. So these are all the calculations you are expected to do. Remember, also, there's a question where you're comparing direct material costs from one year to the next year, and you're also talking about the break-even point for this particular business. Right, let's start off by looking at the information. Remember, once again, guys, important, when you're looking at these accounts, look at them as a flow of information. We've spoken about this, we've alluded to this many a times in our lessons, and it's important that you understand it. From your cost accounts into your work in process, from your work in process account into your finished goods account. So there's a flow of information. And once you understand that flow, I promise you, this section will be a piece of cake, chocolate cake. So you know our favorite. Right, okay. So there's my work in process, we've dealt with it already. And there's my finished goods, there's my trading, there's my profit and loss. Let's go to the first question. Here we are expected to answer the selling price per flag. Now clearly, if you're working with the selling price, you need to identify where are you going to find the selling price, right? And you're going to find the selling price, obviously, in your trading account. There we go. There's my sales figure. So my total sales figure for the year amounted to 701,250. Therefore, I say take my selling price, which is 701,250. You recall from the previous information that we produced and sold 5,000 flags. Therefore, if you take your 701,250 divided by the number of flags that we produced and sold, and my answer obviously will be 140,25. Where we go? Where's our slide? Here we go. There's my answer. So your selling price per flag amounted to 140 Rand and 25 cents. Selling price per flag. Once again, selling price, where will I locate the information? I need to go to my trading account to find that information, like I showed you. Okay, the next one. We're now calculating the cost of production per flag. Simple. Step number one, where will I find my total cost of production? Come, at this stage, you should be screaming out the answers and saying, I know where to find that. That's right. I'm going to find it in my work in process account. And here you can see in my work in process account, there we go. I wanted my total cost of production, isn't it? My total cost of production, there's the figure. Remember, that's the figure that you take to your finished goods. So depending on the information that's given to you, you could either get it from your work in process or your finished goods, because that is a flow from one account to the other. What's my double entry? A debit to my finished goods and a credit to my work in process. As you can clearly see here, there's the value of my production for the year. Therefore, I go here and I say, right, take my value of my production for the year, 425,000. Once again, here we go, 425,000 divided by the number of flags produced and sold will give me a figure of 85 Rand. So here we are. Again, let's go back. There we go. There's my 85 Rand, and that's the cost of production per flag. In other words, what did it cost me to produce one flag? Got it? Okay. There's my profit and loss account. Let's look at my next question. My next question says, calculate the gross profit per flag. Again, gross profit. Immediately, this should ring a bell. What am I looking for? I'm looking for my gross profit. Where will I identify it? Where will I find it? Am I going to find it in my work in process account? Certainly not. Am I going to find it in my finished goods account? No, definitely not. So where then am I going to find it? Obviously, guys, I'm going to find this in my trading account. Okay, so therefore, look at your trading account or the profit and loss. In fact, both your final accounts here would give you that figure. So you could either look for it in trading or in profit and loss. Why? Because your gross profit is transferred from your trading account into your profit and loss. Double entry, a debit to my trading account and a credit to my profit and loss. This is a giveaway. There's the information telling you you made a gross profit of 276,250. Got it? Okay. So now, therefore, if I look at my calculation, I need my gross profit for the year, which I've identified, and we said it could be found in two places, either the trading account or the profit and loss account, because that information flows from trading into profit and loss. Okay, there we go. 276,250 being my gross profit for the year, divided by the number of flags produced and sold. Therefore, we go 276,250 divided by 5,000, and this will then give me my value of the gross profit per flag, namely 55 Rand and 25 cents. And what is that? That's the gross profit that you've made per flag. Once again, look at this question. You are not expected to draw up any of the accounts, but you are expected to analyze these accounts and get information from these accounts. So not only is it an application type of question, but it's an analysis and interpretive type of question. And yes, that's the type of questions you can expect in your exams at any time. Okay, so we're done and dusted with our gross profit per flag. The next one that we look at, again, is the net profit per flag. Now this one here, you can only get the information in one account. Yes, that's right, the profit and loss account. Okay, so let's look at the profit and loss account. Here we go. In my profit and loss account, I've got my GP, my gross profit, which I brought in. You recall that one. Then I brought in my two cost components. What were they? My admin cost of 68,000 and my selling and distribution of 77,000. So in this way, I've brought in the two cost components that had to be dealt with, and I'm left with a net profit of 131,250, right? Just a bit of information here once again. Y capital, the profit made by this enterprise, belongs to the owner. And the owner has two accounts that determine the net worth of the owner. In other words, everything that the business owes the owner, watch my choice of words, everything that the business owes the owner is in the capital account, right? And everything that the owner owes the business is recorded in my drawings account. Okay? So these are the two owner's equity accounts. What are they? Capital and drawings. So therefore, you can clearly see that the profit made by the enterprise belongs to whom? It belongs to the owner. Therefore, that amount has to be transferred into the capital account of the owner. And therefore, you're transferring the net profit into the capital account. Okay, now, we're looking for, what are we looking for? We're looking for the net profit per flag. That's what we're looking for. And we said, what are we going to do? We're going to go to our profit and loss account. Okay, in my profit and loss account, I've got a net profit of 131,250, right? 131,250 divided by the number of flags. Let's do that. So here we go. 131,250 divided by the number of flags, and this then gives me my net profit per flag, which is 26 Rand and 25 cents. Here we are. That's your net profit per flag. Okay. The next question says, calculate the markup percentage. That means, again, what information do we need? We need our gross profit per flag. Remember, we calculated that, didn't we? We calculated that, and that obviously was the 55,25. Let's see if we can identify it for you. Here we go. There's my 55,25. So it's my gross profit per flag, okay, over my cost of production, which is in fact my cost of sales, isn't it? And that works out to 85 Rand. I think we worked out that one as well. Let's see if we have it. That was my gross profit per flag. Let's see if we have it. Here we go. Remember, we calculated this one as well, which was my cost of production per flag. So therefore, guys, let's go back to our calculation. It's your gross profit per flag, which was the 55,25, divided by the cost of production per flag, right? And you want to express it as a percentage. So you multiply it by 100 over 1, okay? And obviously, if you do this calculation, you find that you have a markup percentage of 65%. So in this way here, you can see exactly that the firm is using a markup percentage of 65% in order to arrive or to mark up their goods. Okay, this then means, therefore, we have to now go on and compare our direct material costs for 2018 and 2019 and comment on the difference. Let's do that. So here's my direct material cost. It's given to you in a table form. There's 2018, there's 2019. The number of flags produced was 3,000 in 2018. In 2019 was 5,000, sorry. Let's do that again. In 2018, 3,000. In 2019, 5,000. Look at my direct materials. It went up from 29 Rand to 33 Rand and 40 cents. So this is given information. You are expected to what? Comment on it. What's our comment? Clearly you can see that the price of your raw materials increased. Obviously, because the cost of your raw materials increased, your direct materials cost per unit will also increase. Very simple. It's costing you more money, and because it's costing you more money, therefore, your cost per unit will increase. However, is there another reason why you could get an increase? Let's assume the question said, there was no increase in the price of your raw materials, yet your cost per unit of raw materials increased. What could be the reason? Watch. The reason could be poor quality of raw materials. That means, yes, you bought raw materials at the same price, but the quality of the raw materials was very poor. And when you have a poor quality of raw materials, then you have wastage. So look at the type of question. Look at the information that's provided to you. And once you have that, you will be clearly in a position to answer the question and then also understand what you are doing. So guys, we've covered a very comprehensive type of question here, which is important for your preparations, for your exams, or for any activities that you may be doing. So make sure that you practice, practice, and practice. You want to know more? The place to be is with Ashraf and the crew. We'll see you in a jiffy. Welcome back, accounting boffins. Yes, we are busy with cost accounting. We're looking at different types of questions that you could be exposed to in a classroom, in the exams, in an activity, any activities that you may be doing. Right, we move on now And the question says, calculate and comment on the break-even point for this business. Right. Before we move on and actually do that, let's first explain what we mean by the break-even point. Remember, the break-even point is the number of units that we have produced and sold. At that point, the profit will be equal to 0, right? We're neither making a profit, neither are we making a loss. So in that case, that's the minimum number of units that need to be produced to break even. Obviously, if you produce above the break-even point, which is every enterprise's ideal and dream, to produce well over the break-even point to maximize the profits. But if they produce below the break-even point, then certainly they're going to incur a loss. Right, we move on here. We are given the work in progress account, right? And we are given the profit and loss account, and we are now going to calculate the break-even point from this information. Step number 1, you want your contribution per unit, right? Okay, now what is my contribution per unit? My contribution per unit is my selling price per unit, right? And again, watch what I'm going to do. I'm going to go into my trading account. Okay, let's find our trading account. We have our trading account. We have worked on it before, so we'll pick it up here. Where's our trading account? Let's find our trading account. We should pick it up there. Our sales figure was 701,250. Remember that? Okay, so therefore, if you take your selling price per unit, it would be your sales divided by the number of units that you produced and sold, and obviously we can calculate that to be 140,20, right? That's your selling price per unit. Okay, you then subtract from it your variable cost per unit. Now, how will I get my variable cost per unit? This is what I do. Firstly, of my 5 costs, 3 are variable, 2 are fixed. What are my 3 variables? Material, labor, and selling and distribution. Okay, let's identify them. There's my material, 165,000. Immediately I say, let's just clear that. 165,000 divided by the 5,000 will give me a figure of 33 Rand. That is my material. Labor, 172,000. 172,000 divided by 5,000, and that will give me a figure of 34 Rand and 40 cents. And my third component is my selling and distribution, which is 77,000. So you take your 77,000 divided by number of units produced and sold, and that will give you a figure of 15 Rand and 40 cents. So therefore, if you add those 3 variables, what were they? Labor, material, selling and distribution, it gives you a figure of 82 Rand and 80 cents. Clear? So now you take your selling price per unit minus your variable cost per unit to give you your contribution per unit. Very, very, very important indicator with regards to cost accounting, your break-even point. But obviously, you first need your contribution per unit. Once you have your contribution per unit, which is 57 Rand and 40 cents, how did we get that? Selling price per unit, remember, your selling price per unit minus your variable cost per unit gave you your contribution per unit. Now what do? Now we take our total fixed costs in rands, and that's important. your total fixed cost in rands. Where are we going to find it? Let's go back and see where we're going to find our fixed cost. Firstly, identify your fixed cost. What are they? Your two fixed costs are factory overheads and admin cost. Where will I pick them up from? One, factory overheads. Here we go, 88,000 rand. Okay, so let's put it there. We got the 88,000 as our fixed cost for factory, plus the next fixed cost that we need is our admin cost, right? The next fixed cost is our admin cost. And where will I pick up my admin cost? I'm going to pick up my admin cost from my profit and loss account, which is 68,000 rand. Now look at this question, people. The figures are not given to you. You need to go and find the figures. You need to look at the information that's given to you and know where to find the information that you are looking for. So therefore, the next cost is the 68,000 for my admin cost, and therefore, what I do is I say plus the 68,000, and this will then give me my total of 156,000. What is the 156,000? It's my total fixed costs in rands, in rand value. Therefore, looking at my indicator once again, total fixed costs, remember, in rands is 156,000. Clear? I worked it out. I showed you what the fixed costs were. It was your factory overheads and your admin cost divided by your contribution per unit, which we calculated at 57.4 to give me the total number of flags that need to be produced in order to break even, right? And this particular example, our break-even point, if we work it out, it amounts to 2,717. Remember, this particular indicator, your answer is always in units, right? In this case here, we've written flags for you to indicate that the number of flags that we're talking about, the production and the sales of flags. Okay, so this means, therefore, we have to comment on the break-even point. One, accounting boffins, is to calculate the break-even point, right? And number two, you must also comment on it. Very often in the exams, you will find the examiners saying, prove that the break-even point is correct. That means they could have told you that the break-even point was 2717. They would say, provide a calculation to prove the break-even point to be correct. It's nothing else but doing the break-even point. Okay, so here we go. He's producing and selling 5,000 flags, which is significantly more than the break-even point. In fact, it is 84% more. It is higher by 84%. So obviously, they would be very thrilled with their levels of production. Why? Because they're producing well over the break-even point, and therefore, they are making a profit, a substantial profit. At the moment, it is not a risk situation. Even if production decreases to a certain amount, they would still be making a profit. Obviously, they don't want the situation for production to reduce or to drop. In fact, the ideal would be to even increase production further so that you can make a maximum profit from this enterprise. Okay, we have a question here where we are told that Freddie is considering traveling to the rugby match in Cape Town for 5 days to sell his flags. These are the following. This is a scenario. This is a case study that you have, right? He feels that he can sell an additional 2,000 flags at 105 Rand each, okay? And also he will have to pay 5,000 Rand for his airfare and the transport of the flags. What are we supposed to do? We are supposed to, okay, and further information is here that he will have to get his employees to work overtime to make these flags. That means they'll have to put in the normal rate plus 50%. Should he consider this option, present a calculation to support your answer. Let's look at it. Should you consider this option? And we are expected to give a calculation to support our answer. Firstly, number 1, the extra sales will be 2,000 flags at 105 Rand each, which will raise a sales amount of 210,000 Rand. Got that? Okay. So extra sales would result in a figure of 210,000 Rand. That means if he considers this option, the sales will increase by 210,000 Rand. Okay, number 2. Your variable costs will be the 33 Rand, right? The 51 Rand 60, and your selling and distribution, right? But remember, what had happened here was that we said that because the employees will be working overtime, you're going to now have more labor involved. And therefore, your labor costs would increase by 50%. As a result now, you can see that the labor moves up to 51 Rand and 60 cents if you're looking at your labor, your direct labor costs per unit. Why? Because of an increase in the overtime, the laborers that work overtime to produce those flags. Got it? Okay. That now gives you a total cost of 200,000. Now you tell yourself, what are the other costs that were involved? Remember we said the airfare, the extra admin cost would be 5,000 Rand, therefore giving you an extra, this whole exercise will result in an additional profit of 5,000 Rand for Freddie. Yes, definitely, he would be visiting Cape Town, he would be seeing the place, and this whole venture would result in a profit of 5,000 Rand. Again, it's an open-ended answer. Should he do it? Yes, he could do it, no problem. He would gain an extra 5,000 Rand, he would visit Cape Town, or maybe it's not worth it to putting all this effort in only making 5,000 Rand. It's an open-ended question. The choice is entirely how you interpret and how you respond to that one there. Okay. Another very important concept that we use in manufacturing, and that is, what do we mean by economies of scale? With specific reference to fixed cost, provide an example. Let's look at this here. Firstly, what do we mean by economies of scale? Economies of scale basically means as we produce, as more units are produced, the fixed cost per unit will decline. Think about it. And let's take a very simple and a basic example. If you're taking your fixed cost to be 100, right? And you are producing 100 items. There's the items that you are producing. So, clearly you can see that your fixed cost per unit in this case here is 1 Rand. Why? 100 divided by 100 will give you 1 Rand. But if you keep your fixed cost at 100, right? And you now produce 200 units, clearly you can see, in that case, in the first scenario, my fixed cost per unit was 1 Rand. It now changes to 50 cents per unit. So what are we saying? As more units are produced, watch, we're producing more units. The fixed cost per unit will decline. Clearly, it was 1 Rand, but because we increased the production, the fixed costs remain the same, they fixed, therefore, the fixed cost per unit will decline. Okay. We now look at an example again. Watch this example very closely. You've got 2018 to 2019, There's your information. Your factory overheads was 100,000, has gone up to 120,000. Okay? So your fixed cost increased, right? Your units produced were 50,000. They now gone up to 75,000, right? Your cost per unit was 2 Rand, and your cost per unit now is 1 Rand and 60 cents. Now the question is, although there was an increase in your fixed cost, correct? As you can clearly see, it increased from 100 to 120,000, but there was an actual decrease in your fixed cost per unit. Why is that? Very simple, guys. It basically means that as your units produced increases, the fixed cost per unit decreases. And why is that? Because of economies of scale. So now we have clearly explained to you what we mean by economies of scale. Okay, in conclusion, let's summarize what we've done. We've dealt with cost accounting in a manufacturing concern. We've dealt with all the ledger and the cost accounts. And we've dealt with factory overheads, cost of production, and very important, the flow of information. Okay, guys, so we've concluded the section on cost accounting. It's time for us to land our flight, a smooth landing. We hope from Ashraf and the team that you understand this section, and yes, you're going to ace this question. Wherever it may be, in an activity, in an exam, wherever you are faced with this question, you're going to ace it. Remember, aim for the moon. Perchance, if you don't get it, you will definitely be Ashraf's shining accounting star. Until the next time, be good. Bye-bye.